Hi there, welcome to Kneppy Invest and welcome to another technical update video. You won't see much difference in this video compared to my previous technical update videos, except towards the end when we look at individual companies. I have no companies planned to look at, but what I will do is I'll have a look at one of the screeners I'm starting to look at every single day. This is a screener in training view, and I'll talk about that towards the end of the video. And the whole reason I'm now screening, doing that sort of thing, is I'm looking for more trades. And the reason I'm looking for more trades is my whole investing philosophy has switched on its head over the past few weeks. A few weeks ago, 25% of my portfolio was trading, 75% was in high quality and small cap companies. And I now want that to be reversed, where only 25% of my holding, my portfolio, is in high quality companies. The other 75% is trading, which includes small cap companies. The whole reason behind that is I've tested these particular strategies. This is the group portfolio, but I've been running for almost 2 years, 2 or 3 years. The group portfolio is actually down 14.37% per annum. So let's not talk about the group portfolio just yet. I will do a video eventually on the performance of the group portfolio and why it has significantly underperformed the market. But my own portfolios, quality portfolio, since the start of the financial year, is up 17.3% compared to the Nasdaq 100 ETF, which is up 22.9%. My small cap portfolio, and I'm happy about the performance of this, is up 25.6%. I can't be disappointed with that. I love small caps and significantly beating the small ords or the XO, which is only up 8.9%. And I think the main reason behind that is I really like these small cap growing companies that look good value. That's my whole philosophy when I'm looking at small caps. Now, a few years ago, I was enamored by story stocks, and very few story stocks are in my small cap portfolio right now. In fact, I'd say almost zero, or maybe not zero, maybe one or two. In fact, to have a look, only show showing only open positions. Now, I was wrong because if I include closed positions, this small cap portfolio is only up 21%. So I have sold out some positions. Now, if I just look at my open positions, very few story stocks here. Maybe one story stock. I'm trying to find one in here. There's no story stocks in here. Not one. I thought that. Now, I am holding two companies, Pointera and Alexium. Those are two story stocks, but I decided just to limit myself to two companies, and I did not put these companies into this particular portfolio because they're on the side. They're my guilty pleasures, and I really hope both of those companies do really well. But otherwise, every single company in this particular list is a legitimate company that has possible upside, and you can see only 5 companies within this particular portfolio are actually down right now. One of them's down big, but on the flip side, quite a few of these companies are up big. I've taken profit with Findy. I've sold out of Task Group. I should put that in there because I've taken profits with that company because there was a takeover bid for that company. But otherwise, yeah, it's doing really well. But when I compare the small cap portfolio, I have to show open and closed positions, compare that to my technical portfolio. So this is where I just use technical analysis to make decisions. This particular portfolio is up 58%, I'm thinking. Takes a little bit of time, 59.4%. 59.4%. And to be honest with you, I have made a lot of mistakes in this particular portfolio or using this strategy. Many mistakes. You can see A2 Milk, I took profits with that. I think I took profits. It says return negative 136. I'm pretty sure it should have been a positive return, or maybe I've made a couple of trades in that. And the share price has taken off. Completely missed that. So if I just have a look at my open positions right now, I have taken profits with other companies as well. So at this point in time, and I'll look at percentage return, monetary gains. So at this point in time, my biggest return is integrated research. and I've added to that position or that trade. Then we have Superloop. I'm thinking of adding to that position. Southern Cross Electrical Engineering, Bravura. I have taken profits, so I should put that in here. And if I do put that in, my performance will go up because I sold at about $1.26. I've also taken profit with Service Train, sold at $1.20, and that's now gone up. And I am thinking about taking profits with Vulcan Energy. I might mention that later in this video. We also have some other small cap companies that I think are really good value there. For Adrad, for instance, up 37.8%. Eventually, I'll take profits with MA Offshore because there is a takeover bid for that company. Life 360 up 36%, and I bought off a really positive result. People thought I was crazy buying when the share price was up 15%. Shape Australia is in there as well. And the worst performing is DGL Group. I probably should have sold out of that, but I think there is a possibility that company is stinking cheap right now. There are reasons behind that. So that's what I'm doing. So you can see here where I just use my open positions. It's only up 17.4%, but I've taken profits with many companies. For instance, Atlas Pearls, 257% profit. Step One, profit with that one. Zip, 120% profit with that. I still own a small percentage. And Doug Technology, I took profit with that, but I still own some shares in Doug as well. And Doug is in my small cap portfolio. So anyway, so the whole reason why I've decided to pivot is because of how my technical analysis is going and trading in that, using that strategy is going. It's highly successful, and I just like doing it as well. So why not focus on that, particularly because it's doing well, and I like doing it. I really like doing it. Anyway, on a little bit of a tangent. So in today's video, what I'll do is I'll go through the indices, go through the commodities, and I have a feeling some of these commodities are looking really interesting, intriguing, exciting, if you will. I'm talking about copper, particularly copper and silver. So the title of this particular video will be Copper and Silver because those two charts I think look great. And I'm just looking there, copper up 3.6%, silver up 4.6%. And when we look at the charts, absolutely fabulous charts for both of those. And I believe silver might have broken out the last week. And then, as I've mentioned, we'll have a look at some companies. And I have no idea what companies will come up on this screen, a 3-month high screener towards the end of the video. So let's have a look at indices. We'll start off with the XJO, and what I'll do is I'll just go through the weekly. In fact, 4 up weeks in a row. So that's after a couple of down weeks previous to that, but still an uptrend. No reason to be concerned. Sort of in the middle of the trading channel. It could go down from here, it could go up. Sort of the bottom limit, the bottom of the trading range would be if it fell in the next few weeks by 1,200 points, that would be sort of towards the bottom, maybe not even that much, 1,100 points, that would be the bottom of the trading range. Top of the trading range would be above 8,000. And you would expect 8,000 would be a fairly important level for the XJO because this particular indice has never reached that level. Now the XAO, which is your ordinaries, is above 8,000. Got above $8,000, $9,000. Got about 8,000 back 2 months ago. So first got above 8,000 on the 4th of March week, and has been sort of going up and down below 8,000 since then. But even the ordinaries looks pretty good. XSO, which is the small caps, not quite as good, still well off the all-time highs, which was way back in 2007, and even the most recent high, which was back in November 2021, still well off that. So still a lot of room for small caps to move from here. And if the market keeps going up and up and up, and if we do see interest rates falling, I think small caps could go on a significant run. And that was the one thing I was thinking about in regards to selling out of some of my small cap companies, was there is potential I could be selling towards the bottom. But I think those companies that I did sell, I think, this is just my opinion, they have to prove themselves to me and to the market. In fact, the small odds was down this week. Small odds down 0.15% when the XJO was up 0.84. So still a little bit of weakness in the small cap space. So it seems like most investors right now prefer more mature, bigger companies than those smaller companies. I don't care. I'm looking for really good companies or companies that have potential to be significantly bigger in the future. and provide good value. And I am still finding that, I'm finding a lot of those in small caps. Some of you might disagree with me, but I think Mayfield Group, Adrat, very small companies in terms of market, look really good value. I think Mayfield Group might have a P ratio below 10 again, and has the potential to grow because of tailwinds behind that business. I did a video on Mayfield Group recently. Let's have a look at the American markets. Looking at the weekly chart, the Nasdaq. The Nasdaq is all-time high. And just like the XGO 4 up weeks in a row, Nasdaq up 2.1% in the past week. Now, what was interesting, I'm going to pivot back to Australian markets. And look at the daily chart. I have no idea what happened on the Australian markets on Friday. We were down 0.8%. Why? Was it because it was exceptionally good day on the Thursday, up 1.6%? But the Nasdaq and even the Dow Jones and S&P 500 didn't have a bad day on Thursday and not a bad day on Friday. In fact, the Nasdaq was virtually flat. Dow Jones was up. S&P 500 was up. I'm not sure why the Australian market had a bad day on Friday. I do expect a nice little bounce. Now, don't think the futures are in CommSec just yet. Yeah, futures say we're going to have a good day, 35, so up 35 points. So I am expecting a pretty good day on the Australian markets on Monday, in particular copper and silver companies. So Aries Resources, Sandfire, Hillgrove Resources, AIC Mines. I believe AIC Mines is a copper, and there's probably a few others out there that I'm completely missing. Those companies should have a good one. Silver, Adriatic, Silver, was it Silver Mines or something? I think it's called Silver Mines. Silver Mines. Silver something Mines. SVL. I think it's SVL. No. SLV. No. Oh, I'm looking in the futures. That's probably why. SVL. Silver Mines Limited. Yeah. I was not lying. So Silver Mines Limited, their chart probably looks pretty good right now. This looks like it could be breaking out, particularly with silver prices up a fair bit. And I'll talk about silver in a second. I'm getting a little bit ahead of myself again. So Nasdaq looking pretty good. Dow Jones over 40,000. Finished at 40,003.6. First time it's finished above 40,000 in its history. And the S&P 500 will probably look fairly similar to, and let's have a look at the weekly chart for Dow Jones. In fact, the Dow Jones and Nasdaq look fairly similar, don't they? Not much difference, but there is a big difference between the two. This is the Dow Jones Industrial 30. So only 30 companies within this, and I have no idea which 30 companies are in it. And the S&P 500, do we have to have a look at this? Pretty good. The only other one I want to have a look at is the Russell 2000. So this actually looks more similar to the XSO, which is understandable. This is sort of like a small cap index in America, the smallest 2,000 companies on the Russell 3000. Here is a Russell 3000, which looks fairly similar to the Nasdaq and Dow Jones, which is understandable because this is the 3,000 biggest companies in the Nasdaq. I could be completely mistaken. Nasdaq and the what's the other one? New York Stock Exchange. While the Russell 2000 is the smallest 2,000 companies. So it's minus the largest 1,000 companies. And that looks fairly similar to the XSO. And so this is a small cap proxy. DAX probably looks pretty good. Yep. Oh, a down week for the DAX after a really good week. And the FTSE up. FTSE and DAX look brilliant. Hang Seng. Oh, Hang Seng Connect China 500. I'm not sure if this is the right one to look at. That looks positive. And I'm pretty sure I have the Nikkei somewhere here. Nikkei, yeah, looks like it's bounced off the short-term moving average channel. So this is sort of the bounce I'm looking for. Okay, so let's have a look at commodities. So everything's still looking pretty good. No signs of any trouble or stress in the global indices right now, unless maybe you're looking at Djiboutian indice, which I doubt. I'm going to say I do doubt Djibouti has a stock market. I should Google it. Let's Google it right now. Djibouti stock market. Okay, Djibouti does not have its own stock market. There you go. But some multinational companies with investments in Djibouti are publicly traded. Why invest in Djibouti? The country's strategic geographic location is its most attractive investment feature. Djibouti is much as my favorite country in the world because of its name, Djibouti. One of the only companies, Dominican Republic, Denmark, Dominica, it's Dominica a country, yeah, and Djibouti, all start with D. And just the name, Djibouti. Okay, a bit of a tangent there. Let's have a look at commodities. That's the whole reason we're here. No, it's not really, but I love looking at commodities. So we'll always start off with gold. And shall we stick to the 1 week? Yeah, let's have a look at the 1 week. In fact, when you look at the 1 week or the weekly gold chart, it's been bullish since 2019. So back in 2019, the gold price was 1,200. Now it's 2,400. So if you actually extend this weekly chart, I still remember watching the Sky News Your Money Your Call show back in, was it 2014 or 15? And gold companies were featured quite often as the best performing or worst performing companies. And during that time, you can see gold was in a downtrend, and that's understandable. So companies are going to be more volatile when we're in a bear market. So that's really understandable that gold companies, I just remember that. It was one thing I do remember that call, that gold companies sometimes are up 10% in one day, and the next day they were the worst performers on the ASX. And that's when, well, the last time we were in a pretty well-defined downtrend when it comes to gold, but it's been looking good ever since then. And it's broke out. This is a beautiful breakout. Don't get nervous when you see something breaking out. And the breakout for gold happened in early March. And it's just continued to go up since then. And in fact, gold has closed this week at a record high. So it has been higher previously, but it fell back. Now it's at a record high. I'm just going to have a look at what happened on Friday. So Friday, gold was up 1.6%. And this is important. If I have a look at the 5-minute chart, gold really rallied after we had closed for the day. So this means we should have a good day on the ASX when it comes to gold companies. And I'm not complaining because I have a few gold companies. Okay, uranium, we'll keep with looking at weekly charts for uranium. I think uranium's had a little bit of a pullback over the past 3 months, just like it did back in April 2022. And I think it has stabilized. And I would expect possibly uranium could go higher from here. So uranium looks interesting right now, but not as interesting, in my opinion, as copper. And you'll notice when you look at the copper weekly chart, this has just exploded. A really good week for copper, up 8.3% at an all-time, well, maybe not all-time high. I'm assuming, yeah, this could be an all-time high for copper. All-time high. So a really good week for copper. Not only that, if you look at the daily chart for copper, a really good Friday. So Friday, it was up 3.55%. And again, let's have a look at the 5-minute chart for copper. You can see most of the movement was after we had closed for the day. So it really started to move in the afternoon, but the really violent movement in copper occurred Friday night for us and just kept on moving. This is a fairly bullish 5-minute chart for copper. So hopefully you have some copper companies. I have one. I should have more right now. Should have more. So yeah, copper looks really, this is a bullish chart. In fact, there are quite a few companies on the ASX whose charts look like this. And I always get a little bit hesitant about buying those sort of charts. And maybe you shouldn't, because this looks brilliant. Let's have a look at the weekly chart for nickel. Lots of negative sentiment in nickel. I was watching or listening to the podcast, not the podcast, Ausbiz The Core. I was about a month and a half behind, and I forget the guy's name, but he said, yeah, nickel's done. Nickel's completely kaput because of a flood of, was it cheap nickel pig iron by China or Indonesia? He didn't say that, I think. And he said, oh no, it's just so completely negative around nickel. And since then, which would have been back in early April, late March, nickel has gone on a run. Nickels has gone up probably 15 to 20%. Anyway, so I'm not negative about nickel. I have no idea. Who knows? There's some reason it's going on a run right now. I have no idea why. US oil will stay with the weekly chart. If you look at oil for the last 3 years, it's really done nothing. So back in June 2021, oil prices were about 75. Now they're 79. So really done nothing. Oil, I have to go back further. In fact, Jeez, I didn't realize this. This is going all the way back to 2008, and oil has done nothing in the last 15, 16 years. Absolutely nothing. Compare that to gold. Same time frame, gold has gone up for almost three and a half fold. So why do people love oil? I don't understand that. If you just look at this long-term chart, it's just done nothing. You might get excited about oil when it gets low, really low, like below $40 a barrel, and hopefully that's when oil companies' share price look cheap. But everyone's talking about energy and oil being really cheap. But when you look at this, oil has not increased. The price of oil has not increased over the past 20 years. So let's go back 20 years. Oil had a really good run between 1999 and 2007, but since then, nothing. Okay, onto silver. So let's zoom back in for silver. In fact, look at silver. Much higher prices back in 2011. But silver is starting to go on a run. And it's broken out. Silver up 10% for the week. Now, to be fair, it's only 9.7%, but I'm going to round it up to 10% because 10% is way more dramatic and intriguing. And I have a feeling it was Friday, up 4.6%, where we did see it take off. And you can see another buy the dip situation with silver. Dipped. Beautiful dip. This was a perfect dip. So silver went up to this resistance level here, pulled back to the support level, and then ran off again and broke out on the 15th of May, so during the week, and just taken off. So those silver companies on the ASX should have a great time. There's not many, but they should have a great time. And silver chart looks absolutely stunning as well. And let's have a look at coal. Coal, I think, definitely is bound to bottom. It's trying to move into an uptrend, trying. Gas up 5.2% on Friday. This is looking interesting as well. But still, we had to have two recent peaks back in January of this year and November last year. So wouldn't necessarily say this is a breakout, but it is starting to look a bit more interesting. And for Anderson, let's have a look at Palladium. Or have a look at tin as well. So Palladium, not interested right now just because it's really doing nothing, but maybe a bottom has been reached. Someone did mention in my chat, in my comments, I did notice that. In fact, here it is. I have to go all the way to the top. Over 80% of current Palladium use case is on catalytic converter for internal combustion engine. Do you see the future for Palladium demand to ever recover increase from here? Well, there is a possibility if we can find further uses for Palladium, which is a possibility. I don't know because I am not an expert on Palladium at all. Zero. I'm going to bookmark share site. Oops, wrong one. There we go. All right, so that's Palladium, and the last one is tin, right? Haven't looked at lithium because lithium, I should have a look at iron ore as well. So this is tin. I like tin as well. And tin had another pullback. So I am trading one company when it comes to tin. That's Metals X, I think. And Metals X did dip back a little bit more than I wanted to, and has started to increase again. And let's have a look at, what was it, iron ore. Iron ore, I think it's flat. Yeah, flat. So nothing too exciting with iron ore right now, but that's okay. A high iron ore price is really good for the country. So why not be bullish, or why not be positive? Maybe not positive, but why not be excited that iron ore is just under $120? Anyway, so that's all I got for commodities. Let's have a look at the Bitcoin. So I do have about, what's it, $5,000 in Bitcoin, but I don't really follow the price of Bitcoin all that much. And I just noticed that Bitcoin had a pretty good week. So Bitcoin up 8.8%. And it's bounced off. You can see I put a line here. So I put all these lines here for support and resistance levels. And yeah, Bitcoin, if you do look at the weekly chart, it's never closed below this line here, which is 61,000 something. And you can see a lot of shadows below the main bodies, which means there's a lot of buying when Bitcoin gets below about 60,000 or so. And so a lot of buying this week, and Bitcoin has gone higher. I'd prefer some higher volume, but that's okay. If you have a look at the daily chart, they had 2 good days during the week. Wednesday was really good, up 7.6%. Completely missed that. And that just shows you sometimes I just don't follow some of these commodities or cryptocurrencies all that often. Just like I don't follow the movement of many of my high quality companies all that often either. Sometimes I'm surprised the share price is up a fair bit. Sometimes, although I am thinking of should I take profits with Medicus? I'll talk about that in a second. And have a quick look at Ethereum. Nah, not interested. And a quick look at bonds. What's bonds doing right now? Bonds has dived, although, so I put this line, that's the uptrend in bonds, and it's just bounced off that uptrend line again. Perfect bounce off it. It's done it once already, bounced off it back in March, and now it's possibly bounced off it again. So the uptrend in bonds or 30-year government bond yields are still there, even though we have seen a bit of weakness the last few weeks. It's still there. So went from 4.8% down to 4.5%. Now it's starting to possibly bounce. Possibly. Okay, so let's get to the individual companies part of this video. We're going to look at a screener. But first, let's have a look at Medicus. So I bought Medicus well over a year ago. I should put what price I bought. Maybe I did. No, I bought back here at about $50 or something. It was a beautiful trade. It was a beautiful trade looking at this. And the share price has more than doubled. I just had a look at it and went, God, this company is so expensive. P ratio is like 150 or something. 179.7. So even if this company grows or doubles their profit the next few years, it's still going to be expensive. But then I just don't know. This is possibly a case where I should just play the chart. The chart looks bullish. No reason. You see these dips, quite a few dips, and whenever the share price dips, you see buying, and it gets to a no high. I don't know. This is something I'm grappling my mind around, because when I started investing, I was a value investor. Or more than likely, I would never have bought Medicus back then because I was looking for value. I still got those value mindset when I look at smaller companies, and it's actually doing really well right now. Buying these small cap companies that look really good value. It's doing really well, but this higher end of the town, I'm just looking at some of these valuations of companies I own and going, they look so expensive. Medicus, Wise Tech, even REA Group looks pretty expensive, and Ordinate is another one. And I just think they look expensive. I should take profits, but there's a possibility if I take profits, I might regret it. So the other thing I could do is sell 50% of my holding. I could do that. But even then, if the share price keeps on running, I would shouldn't say regret it, but the main reason I'm holding these companies is for the long term. So I should stick to my strategy. That's what I'm thinking. But why not take profits when you've more than doubled your money in 1.5 years and it looks expensive? So that's what I'm grappling with right now. I have no solution. Okay, so let's have a look at the screener. One of the screeners I am using. So I am fiddling with a few of my screeners. So I have a 6-month screener or 6-month high screener, a 3-month high screener, 1-month high screener, an uptrend screener, a buy the dip screener, which is interesting. I looked at that, and a few companies I took profits with are in the buy the dip screener. So maybe what I should do, instead of selling those companies, I should have seen if they're in the buy the dip screener, and maybe I shouldn't sell. And I'm going to keep a close eye on those companies to see if the share price rallies from here. And that could be a good sign to maybe limit myself from buying buy the dip opportunities or selling buy the dip opportunities. Also have an unusual volume screener. I'll just have a quick look at the buy the dip screener. I'll tell you what I'm talking about. So what I've done with this one is I use RSI for a dip. And what I'm going to do is I'll change this to 40. So I'll screen out a few more companies. And there's only 21 companies at this point. So I'll quickly go through this. This I wasn't going to show you this one. I was going to look at my 3-month high screener and just to show you opportunities or potential opportunities. So this is Reese. So this is possible interesting scenario. But what I want to do is also look at valuations for these companies. And this company, I think, is significantly overvalued, 41.15 P ratio for a company I don't think is going to grow all that quickly. So not interested in that. Iris, which I am trading right now, haven't sold out. And buy the dip means there are oversold. That's the whole reason I use RSI. I just want to see share price that is in an uptrend. So other filters I have used, make sure these companies' share price are in an uptrend. So even with Reese, definitely in an uptrend, and the share price has pulled back. And the question is, has it pulled back far enough where it is oversold, where I could, possibly buy the dip? With Reese, probably not. Iris, I am trading right now. A little bit of weakness in the share price, still in a very weak uptrend, and could be an oversold situation. And now we get to one of the companies I took profits, Judo Capital. So the share price has pulled back. It just fell briefly below my sell point, which was $1.24, and I just wanted to sell for some reason. But it is oversold right now, and I'm just thinking there is a possibility the share price could bounce from here. Fleet Partners is another one where it did release results and the share price did find some weakness. That's why we see some higher volume. But is this a buy the dip opportunity? It's right on the long-term moving average channel. Last time the share price was at the long-term moving average channel was back in October 2023, and that was a buying situation. Not sure about that one. ServiceStream, I took profits with this one. Again, possible buy the dip, but I've been wanting to sell this one for a while, and it fell to my sell point, so I was glad to take profits. I don't care if the share price of this company rallies from here because I just wanted to take profits with ServiceStream. I've held it for a while, and the only reason I was thinking of holding is because I bought in June of last year, and I was thinking I should just hold it for another month or so to lock in lower capital gains. And Breville was the other one. So this share price of this company has just fallen, and it does look weaker. But again, is this oversold, and will we see a rally in the share price over the next few days? And I think that's what I'm going to show you in this particular screener. So let's have a look at the original screener I was going to show you, and that's the 3-month high. Yeah, we'll say yes. Yes. So I have a 6-month high, which was my original. And then I thought, 6-month high, I might be excluding some companies that I want to have a closer look at. So I've turned it into a 3-month high. And then I thought, well, there could be some other companies that look interesting that are not quite a 3-month high. And then I started to look at a 1-month high. Now, technically, all companies in the 3-month high should also be in the 1-month high. So 3-month high, we have 123 matches. Now, I'm not sure how they get to 3-month high. Is it within the last day or two? I should actually have a look at it, because some of these companies I didn't know why they were in this particular screener. I think that was more the 1-month high. But straight away we have, and the other thing I should mention, I've ranked these companies or listed these companies by market cap. So I'm way more interested in the higher market caps. Once you get to a market cap below 50 million, I'm less interested, or maybe even 10 million, I'm less interested. So the first company on this list is South32, and I have taken position in this company about 2 weeks ago, and this chart is starting to look really interesting. Not only 3-month high, this is a company that would now be in my 6-month high video or 6-month high screener, because the share price right now is at about a 9-month high. Mineral Resources, a company I do own in my high quality portfolio. This chart looks pretty good, and I should not be hesitant about trading companies that I own in my long-term portfolio. And we had a nice little pause in the share price for about 2 weeks here between $76 and $78, and now the share price has taken off again. ALS Limited, to go at ALQ, it's in a resistance zone. In fact, I can do now rectangles. I learned how to do that. Rectangles. Took me ages. So this is a resistance zone. Why is that a resistance zone? Because the share price, whenever it gets into this zone, and we're talking about the last 3 years, it struggles to get out of it or above it. We've seen it now about 3 or 4 times, or 1, 2, 3, 4, 5 times in the past. And this company now is at the top of this resistance zone, so potentially breaking out soon. Bendigo Bank. I said this was, I think I mentioned this was a breakout. So it's in another resistance zone, but the share price is at a multi-year high. Yeah, multi-year high for Bendigo Bank. And that's broken out on the release of a positive trading update. Same thing with Intertech Pivot. Positive trading update, and the share price looks like it's breaking out. I'm not a big fan of this company, but play the chart. And the share price did pull back on Friday, down 1.35%. That could be an opportunity to buy the dip, a little bit of a dip. Nickel Industries. This chart looks pretty good. Again, nickel looking pretty good. And you can just see that by Nickel Industries chart looking pretty good. I wouldn't be surprised to see the share price of this company up big on Monday. I'm not going to talk about Adbury because this company is under a takeover bid. You can just see that by the chart. Red 5, the first of gold companies, looks good, looks wonderful. And you can see share price has pulled back 4% on Friday, but it's still within this screener. So I wonder if there is maybe a 2 or 3 day period where it is screening for 3 months high. Clarity Pharmaceuticals. I'm sort of kicking myself that I did not take a position in this company back in March, April, when the share price was about 270. That was my trigger point to take a position. It fell to 260. I still didn't buy. Share price has taken off. Looks pretty good for Clarity Pharmaceuticals. Supply Network, still not a shareholder of this company, even though the share price of Supply Networks is in a beautiful uptrend. I doubt there is a shareholder of this company who will be complaining. Okay, Vulcan Energy. So I took a position at 373. When was that? That was on the 8th of May. So less than 2 weeks ago. Share price is now up about 45% since then. And I just don't like how it's just moved up. It's just exponentially risen. Whenever I see this sort of patterns, I know the share price will pull back eventually. So there is potential I will take my profits in this company. And if I see a pullback, say towards $4, I might re-enter. And I'm willing to take profits in this sort of company, Vulcan Energy. And then as we go further down lists, we have Spartan Resources. I'm assuming this is gold. I could be mistaken. Beautiful looking chart for Spartan. I have had a look at Chalice Mining, which I believe is a gold exploring company. And this is starting to turn positive and possibly breaking out for Chalice Mining. Then we have Pentoro. Pentoro is starting to look interesting as well. They just did a couple raising. Another gold. This is a gold producing company. So you see a lot of themes here. I'm pretty sure Kingscape Consolidated is another gold company, starting to look really good. Genex Power is under a takeover bid, so let's move on to the next one. Have Aries Resources Copper. Look, chart looks good. We also had a bit of a buy the dip. Hit the short-term moving average channel, started to go up. Task Group, I've taken profits with this company, takeover bid. And then we have AIC Mines. Can't complain about this chart. I should have bought the dip here. I was thinking about it. 13th of May. Comet Ridge, no idea. And this is one where I just don't know why So this is the whole reason I go through all the charts, because I can actually have a physical look at the chart, and this one I'm like not interested in. Centaurus is one I'm interested in. I'm pretty sure this is nickel exploring in Brazil. Could be mistaken. In fact, sometimes when I'm not completely sure, just have a look at TradingView. Exploration of metals, gold, iron ore, and other mineral resources. Its projects include Jaguar nickel sulfide, and I'm pretty sure that's in Brazil. I'm pretty sure originally they were iron ore in Brazil, and they pivoted to nickel. Yeah, Phoenix, iron ore. Oh, why did I sell out of this one? Silly sell. That's okay. I took a small profits. I've been trading this in the past, but you can see share price is quite volatile. But yeah. And then Demerix, DXB. This chart looks brilliant. No reasons to sell just now. This was a really good one. This was a buy the dip. This is a beautiful buy the dip trade I had. I bought at about, I think it was at 17 or 18 cents on this dip. And this is one strategy I haven't employed all that often, but whenever I employ it, it does work out well, where I see the share price moving into an uptrend and the share price pulls back and I just buy the dip. And when I've used it, it's done really well. And Demerix is another one. I took profits, but I'm still holding a position because the share price is in a beautiful uptrend. I should have taken profits because I took profits at 30 cents, I think. Share price now 37.5 cents. How far down would I go? We're at a market cap of 200 million now. Empire Energy, no interest. Rex Minerals, looks pretty good. So this is another company I know nothing about. I'm assuming it's, I'm going to say gold. Focuses interest on copper gold, York Peninsula, South Australia. There you go. Now, TradingView not necessarily is going to be absolutely right, but does make sense. Copper and gold for Rex Minerals. Red Hawk Mining. This chart looks okay. I think does tend to be illiquid at times, but it looks pretty good. Red Hawk Mining, another company I know nothing about. A company I do know a little bit about is Global Data Centers, and I have taken position at $2.36. Oh, down a little bit from when I bought, but that's okay. That's okay. This is for a longer term position, a small cap company. It's in an uptrend, longer term position. If I see the share price and chart struggling, I will sell, even though I hope to have it or hold it for the long term. Genetic Signatures, this is an interesting one. Share price in long-term downtrend, long-term downtrend, and something happened in March. This is share price rallying, but notice there was a little bit of a dip, hit the short-term moving average channel, and started to go higher. This is trending. It's sort of following the short-term moving average channel. That's a good sign. So this actually chart does look interesting. I'm not that enthused by the company itself, but maybe I'm being a little bit too critical of the company. Kneppy Resources. This starting to look interesting. I'm assuming this is copper. This has popped up a couple of times in the past. Can't remember what I do. That it says gold. So we'll just say gold. And so now we're getting down to the low $100 million market caps. WA Gold, this one looks WIA Gold. This looks really good. Embark Early Education, no interest. MLG, I am interested. This one looks interesting. So this is pop up the other day, and I went, oh, this does look good. So this company has a market cap of $110 million. I'm pretty sure this company is profitable. It says PE ratio of 27, but that's not necessarily mean anything. And then we get to Titomic. This one has really taken off. Share price is really struggling to get above 10 cents. And over the last few days, you've had the opportunity to buy this company about 9.1 cents. That has been a low. So it's been trading between 9 cents and 10 cents. I think eventually the share price of this company will get above 10 cents. But I was waiting and wanting to see the share price fall to about 7 to 7.5 cents, because that would be the buy the dip opportunity for Titomic. SKS Technologies keeps on rising. Keeps on rising. Don't know why, but keeps on rising. Mitre Mining, few good days in a row, looks really good. And then we get to companies with a market cap below 85 million. Never heard of this company, Veritas Mining. In fact, the chart looks pretty good. There was a breakout back in August. So I completely missed that. And I would not miss that with what I'm doing now. And in fact, if I saw this breakout and I saw this pattern, like right there, I would be sort of interested. And look at that. Moved into the short-term moving average channel and then took off. Climate Energy. Well, that sort of, yeah, I don't like the price action there. And when I say price action, it just goes up by 0.5 cents and then just goes up and down. So I don't think there's a lot of trading in this company. And now we're getting to market caps getting to be fairly low. No interest. CZR, well, that actually does look okay. So we're getting towards the point where we have market caps that are fairly low. Beamtree has really bounced. So I wonder why. This could be a company I might be interested in. I don't think it's profitable just yet, but growing revenue. I'm pretty sure it's like a SaaS company or something like that, software company. So that could be a possible company in the future that I'll look at. And then a lot of other mining companies. So I'm just going to go quickly through this. Pure Hydrogen. I think this is just taken off. Yep, taken off. High volume. Advaritis, BSA, Wellnex, Talk Minerals, Kingrose, Straker. Well, let's have a look at Straker. Yeah, no interest. And I think, there's a few other companies I do know here, but we're getting to low market caps at this point. Like Westar Industries. Yeah, no interest at this point. Okay, so that's all I've got for today's video. Hope you did find this last bit helpful for you in terms of screeners, what I sometimes will use. In fact, I look at the 3-month high screener every single day, and I just want to develop a routine, and I really want to develop one screener that I will look at every single day. Haven't really quite developed it just yet, so I am still tinkering with all these screeners. But if you have any questions, any thoughts, or any recommendations about a screener in TradingView, I'd love to hear your thoughts. So leave it in the comment section of this video. Otherwise, that's it for today's technical analysis update. Have a good weekend. And unless you're watching this on Monday, in that case, have a good week, because I'm recording this video on a Sunday and releasing it on Sunday evening. So most of your weekends are gone. My weekend starts on Tuesday. So keep that in mind. My weekend starts on Tuesday, and my weekends are 2 weeks long. Hope that makes you jealous. That's the whole reason I said it. Anyway, that's all I got for today's video. Have a good day. Talk to you later. Bye.